Last week, we were discussing how the bears were lurking in this area, and that's where they would potentially try to take back some control. But the bulls do have a lot of room to work with down here, and we're going to use those weekly expected moves to discuss if this market can crash and what to pay attention to for traps to the downside, but also traps to the upside as well, because the bears have not gone away from this area. Now, there is one thing that I think is the most important part to mention early on in this video, and that is happy Easter. He has risen, and I hope you guys have a wonderful time with your family. Even if you don't celebrate, treat it as a day just to show some gratitude for your family, show some love for your family or someone you love. Give them a call today if you can't spend time with family, okay? Because today really is a big day for us as human beings. It really is a good day to reflect and understand that we can make mistakes. And oh my goodness, I'm sure we have made tons and tons of mistakes during this time of volatility, but understand that this is a moment to reflect on that. And if you are able to wake up the next day and you are still breathing, you still have that opportunity to be better, to make better decisions. And we're going to talk about some of those decisions today as we get into that technical analysis. So let's get into it. Thank you so much for joining me today. Thank you so much for spending some of your time today with me. I am grateful for it, and I appreciate you guys wanting to come in every single day, ask questions, and try to get better. And I think that is fantastic, and we can take that with some good feeling this week, because we understand that we are human beings who make mistakes, and those mistakes can really make us feel a type of way. But at the same time, if we continue to improve ourselves, if we continue to move forward, there is always the opportunity to make better decisions. And that's what we're going to talk about in the beginning of this video as we get into, hey, what if there is some kind of stock market crash, right? A lot of people still talking about a stock market crash. Well, during a stock market crash, a lot of the time you would see some kind of bounce, and then that would wipe things out and turn to the downside as people reload those short positions. As we grab liquidity to the upside, we could see a move further down. So you know what always happens when you see a big move down is you see the MACD curl down into negative territory on the daily chart. So if I'm really worried about a stock market crash, well then, if this daily MACD is able to cross down, if this daily price action is able to close below the 9-day moving average and do that at the same time, crossing down the RSI, that would be all the signals of, hey, downside can happen and you are in negative territory. So if really bad news comes out, you can see major downside. So if I'm worried about a stock market crash, well, then if I see a red day on Monday, and that is proven to curl down a daily chart, we're going to need some good news to whip this thing back up, or else we are at risk of going to lower levels. Now, I am not leaning towards that, because as you come outside of this purple line and you confirm down that MACD, you actually would have a 68% chance to bounce in that area. And maybe we're even able to set up a divergence. Maybe we're able to go test the breakout area, because the breakout area is sitting right around that 502.27 and 504.95 is your weekly expected move right down in that area. So if we make a move down here early on in the week, there is a 68% chance that you curl back up and possibly even see that as some kind of higher low that projects you higher. So we will be paying attention to that, and I think a 4-hour chart is great to display it. We could see that downside move. We could fool around down here for a while, and we'll be paying attention. And make sure you join us live, because we're going to be paying attention to our daily expected moves around these areas and paying attention to even shorter time frames than a 4-hour to see if that 4-hour is able to curl back around. So make sure you join us for the live show. We are live every single morning on YouTube and every afternoon for the close on Rumble. But you can really see this from the 4-hour chart very well. Even if you saw this big downside move and you wiped all of this out, people would get very bearish. But at the same time, if for whatever reason this decides to curl back up because your 68% zone is in this area, well, then you would be confirming divergence. And I'll tell you what, usually during crash type moments, you do not see a divergence confirm, especially on bigger time frames. So that is going to be a very cool thing to pay attention to. And that's why I wanted to make sure to point out downside and get you guys this 504.95 to the downside, that purple line right here on the chart. That's going to be a very important area. And you'll notice it coincides almost 2 points away from your 95% monthly expected move. That is your second standard deviation. This means that if you did come down to these levels, well, then you have a 95% chance to close back within those levels by the end of April. And that would be very interesting to me, because that would not only say, oh, we're going to bounce back into this zone and set some kind of trap like this, but it actually would be confirming either a higher low or a divergence on your MACD. So watch out for traps to the downside early on in the week, but notice that that would be the area where we could potentially see this thing turn back around. And that's what we mainly wanted to talk about to the downside. If I'm really worried about a stock market crash, well, the way that the stock market would crash is this 4-hour actually curls down and it is never able to curl back up, right? We just continue to see that go down and down. So if I'm worried about that, I can say if that is not some risk that I want to assume with my positions right now, if I'm holding long positions up in these areas, well then for the time being, it would be, hey, if the 4-hour crosses down, maybe that's a management of the trade, right? We still talk about these things as decision-making opportunities. And if this 4-hour does cross down, it would be a decision-making opportunity. You could, potentially take on a trade for downside. You could potentially be like, okay, I need to take off my longs, right? These are things that a trader truly has to decide on based on their comfortability, based on what they're seeing in front of them proven in the charts. But we can tell right now that to the upside, mainly focusing on weekly expected moves right now, we can tell that to the upside. Well, one thing is this. We had that 30-minute divergence. Do you guys remember the best trade that we ended up getting here? Boom, to the upside. This is everything we talk about in the course, and confirmation happened right here at around that 501. And then we saw that screaming move to the upside. And I was planning on being like, oh, so, usually you have to hold these positions for at least a couple of days or at least a week or 2 weeks or something. But the money was so good, and we went directly into that bear type area where those bears were lurking. So this is where a decision had to be made, and we discussed that over on Patreon. So these weekly expected moves are going to be very important this week. And so I highly suggest, if you haven't tried it, give it a try. It's $7 a month to join the Patreon right now, and you can get weekly expected moves. You can get those up on your charts right now. If you pause the video, go join Patreon, because we're going to be talking about a lot of those individual stocks. Now let's get into something else here, because if this is going to maybe be some potentially good news or just some upward price action early on in the week, something we will be paying attention to is that upward level, right? 547.87, where those bears would overall be lurking, and that would be up in this area. So if we're going to see a trap early on in the week, well, we might just see this bounce to the upside, get some kind of crazy move, which means we have a 68% chance to land back in that zone. And this is where we can see that trap to actually head down, maybe even lower. I think another trap in this area would lead to a little bit more aggressive selling. Okay, so that one's very, very simple, right? Does the 2-hour confirm up, and then does it curl back down? Because that would maybe shoot us to lower levels as well. Okay, there's a lot of ways for this to play out. But for the time being, if this curled up into positive territory and you're able to hold above this bear level, right? Are you able to hold above all of these resistances up here? That would be a good sign. And maybe we even start some kind of squeeze. But in order for a squeeze, we are going to need some great news. You're going to need some good news. For the time being, everyone talking about more downside, more downside, more downside. But for the time being, this was caused by a 90-day pause in those tariffs. So as long as that pause is still in, it is very unlikely, I would say, to take out these levels. So let's pay attention to what's going on here. If the 2-hour is able to curl up into positive territory, where is it? It's positive territory. So if we curl up into positive territory, see a solid move, as implied volatility has shrunk down a little bit, it's still high, it's still elevated, but then we hold that level that the bears can't really tackle it back down, that would be a good sign. So something to discuss in this video is going to be the 30-minute chart when we're going into the daily expected moves. Weirdly enough, something very cool is setting up here for the daily expected moves. We're talking about the 2-hour being able to curl up into positive territory. Well, if we make a move down using our daily expected moves, 516.78 to the downside, 536.04 to the upside. Well, if we curl down to that 516.78 early on in the day, that would tell us that we have a 68% chance to use this as some kind of support, because we closed above that level 68% of the time using those daily expected moves. We use the options data to calculate these. They are very, very good to have on your chart, and we give them away for free every single night on YouTube. So this is a great time to utilize those and understand, what does my 30-minute MACD look like right now? We had a touch into that negative territory just briefly. If I come to the downside and I see divergence, am I ready to react? Am I ready to trade like water, even though it looks really, really bearish, and maybe the 4-hour even is crossing down? Well, if I see a 30-minute divergence at that level of about 516.78, we see that buy come in and we see divergence confirm on your MACD and RSI at the same time, that could be a great sign for if the 2-hour is going to curl back up to positive into positive territory. This is a fantastic look actually for the market. You are seeing some very, very good things that seem very, very simple, which makes it very nice for a trader at this moment. If we are patient, if we continue to trade like water, if we manage our positions when we have to, and then we see a good signal and stay in the game and create that survivability within ourselves, we can see good things. So for the time being, the two things that I mainly would be aware of is, does the 2-hour confirm up early on in the week, and do we get some good news behind it to hold above that bearish level, or are we going to see some bad news and project this down to lower levels to get down into this area where you would have a 68% chance to go up? Because I guarantee you right now, a lot of people would add on some big bearish bets down in this area right as a potential, well, you would say higher low or divergence confirms on the 4-hour chart. So these are some things to be aware of going into the week. Traps to the upside in that obvious bear level. Thank you to our weekly expected moves. Let's show some gratitude today to those. Thank you to the options market for allowing us to calculate something to tell us exactly where we need to be paying attention for resistance, but also telling us exactly where we need to be paying attention to for support. You can see from the Qs that we do have a similar area going directly down, right? Look at this 422.91 directly at that breakout area. It is fantastic. We've been talking about retesting that breakout area, and maybe we even take out some levels first, right? Maybe we even come down into our buy zone, tap off of that 95% line in the sand for the Qs at 405.44. So these are two levels that I would keep in mind to the downside right now, 422.91 to the downside and 405.44, because this would say there's a 95% chance to close above that line by the end of the month, but there is a 68% chance if you cut through this purple line here to actually see us close back in there by the end of the week. And that would lead you closer to positive territory, whether it's divergence, right? Whether it's divergence or a higher low, you would be closer to going positive. So pay attention to confirmation. Paying attention to news and things like that during these times, it's very easy for people to call some kind of stock market crash when the stock market is overall moving down, but it's very as well, very easy just to have your own mindset and say, hey, if I see that curl back up, we are closer to the center line, which means we could see some kind of positive trend, which means that might be the thing we need to see in order to take out that level for the bears and see something up high like 494 for the Qs. So that's just one thing I'd pay attention to the downside. Very, very similar to the SPY, some great levels to pay attention to. And for the upside move, we can see where that trap would overall come in if we get too excited early on in the week, unless it's off of really good news and we're able to hold these type of levels and see that continued upside. Well, then we need to pay attention to 465.29 for resistance, because as we get to this level, it would say there's a 68% chance to head down from there. And weekly expected moves have been behaving very, very well. When we get outside of them, we have come back into them last week. So let's hope that continues, because it makes it very easy for decision making. Now, how likely is this 2-hour to actually curl up right now for some kind of higher low? Well, the 30-minute would be a good hint of that. And we're just discussing this again to go through it one more time and look at the key levels. As of right now, your daily expected moves for the Qs is 453.65 to the upside, and we have 434.55 to the downside. And this is overall coming down into that area. And if we start off the week down and down and down on Monday, well, this would be the area where we could set something bad up, right? We're aware of those type of things. If things start to confirm up and just curl right back down, we're aware of those type of things. But for now, if you want to see a strong move from the 2-hour, you're going to need to possibly even see this 30-minute divergence early on in the week if you don't get that good news to whip it up right away. So something we can see is if the 30-minute does create that divergence on your MACD and RSI at the same time, down towards 434.55. Now, an upside move would be very interesting, but that would most likely curl up a 2-hour chart, and we would discuss that maybe in real time during the live video tomorrow. But for now, we would just pay attention to if the market is able to give us any hints, because if the 2-hour is able to cross up, it would be in positive territory. And I think that if the 2-hour does curl up, we are most likely seeing some good news behind that, and we will be able to hold this level. So let's pay attention. I did want to make a just brief moment to show you guys a weekly expected move and see a reaction from that weekly expected move and how good it truly was. I want you to check out Apple. These are my other charts. These are my charts that I use in order to actually trade, in order to use my strategy. You'll notice I don't really utilize daily expected moves as much as you think. I only use them during key times, usually on Fridays and things like that. So that's something to be aware of. My trading strategy might just be different than yours, and that's perfectly fine. Using weekly expected moves can be helpful for any trading strategy. And this is why Patreon can be so useful, because Apple saw a great upside move straight up to 212.82. And look what is at that level. The exact purple line in the sand, your 68% zone. The best support and resistance that you can have on your chart every single week is really not going to be, a level to pay attention to over here. In my trading overall, I have found that the 68% zones are the best support and resistance I have ever found. They prove to be right a lot of the time, 68% of the time. So if I'm right 68% of the time in my trades, then that can be really, really beneficial, because that's where I have my edge. And if I'm right 68% of the time and I manage money correctly, I can be a very successful trader. But I just wanted to show you briefly how Apple and other stocks have done this as well last week. And that's why I'm really hoping that we just continue to see tags of these weekly expected moves. I think it is very likely to see tags of the weekly expected moves this week. So let's get another look on Apple. Let's get another look towards Apple and see what we can figure out for this week. Now, for Apple, we do have that 95% line for you. This is the second standard deviation, so we can use this data to tell us with a 95% confidence where the options market is thinking we will end up by the end of the month, what they really have priced in. And you'll notice that this line right here is 190.52. What did we just make below that line that we utilized and we talked about on Patreon, right? The 30-minute, right? The 30-minute divergence below that 95% line. We break through that line. We use it as resistance. We pop up to it. We use it as resistance. We're nice and patient. We know that these volatile markets do like to make divergences. We see a 30-minute divergence, and look at that. Everyone talking the worst about Apple, but a 30-minute divergence pops up outside of the 95% line, and then we see a solid upside move over time here. Very, very good move. I mean, even if I wasn't confident to hold it the whole time, we can see from confirmation up to these higher levels, the resistance area that we were paying attention to, that is almost a 12% move. That is fan-freaking-tastic for Apple. And thank you to the charts. Thank you for divergence, and thank you for myself for understanding how to make better decisions, being patient, waiting, and using the information, the data that I have in front of me to formulate a plan, and maybe even formulate a plan if that goes wrong, right? We talk about that as well, but you did get a 30-minute divergence below the 95% line. That's literally everything I look for in a trade. And if you're confused about confirmation and things like that, hey, the course is down there in the description for you. It's 80% off. But for the time being, that was able to curl up the 2-hour chart. The 2-hour chart was also able to surprise me and see this gap up and see that thing go really nice, go positive in some way. And really, the selling here is not that dramatic. So if this 2-hour is going to be able to curl up, that would signify, hey, I am a higher low. I am going to take out this high and even go make a new one. That would be fantastic for Apple. So what could tempt us in this area if the 2-hour is going to curl up? Well, it's very simple, right? Let's use what we used over here. We saw a 30-minute divergence, and that curls up 2-hour charts. I've tested these things forever. I have really made mistakes while trading, and that's what's made me better and better and better over time. Use me as an example. Use me as a reason to not make those silly mistakes. You are bound to make your silly mistakes, but I've already made them, and that's why I made this channel, to help you not have to go through that pain, maybe just a few less times, to keep you in the game, to keep you from making those silly decisions. That's why I made this channel, right? So if we want to see a 2-hour curl up, what we could see early on in the week that would be very, very, very cool would be we use the 95% line. And Patreon members, you'll have weekly expected moves as well for Apple. Check out where those are at. But for the time being, let's use a little key piece of data that I gave you that we gave out on Patreon, which is that monthly second standard deviation, the 95% area. Which means if we curl down in this area and we curl back up into positive territory, that would be a reversal signal at key support right when everyone is probably talking super, super bearish throughout the day. This little 30-minute divergence can turn around the 2-hour chart, and since the 2-hour chart is lingering right by that center line, that would mean that this would signify, hey, I am a higher low, and watch out because I'm about to take out this high and go make a new one. Still important to make sure that there is news around that, okay? Very important to make sure there's news around that. And the last thing I wanted to say is one of the mistakes that I used to make all the time was I would say, oh, this is dropping down. I have data, so therefore this has to make a divergence at that level. So I'm going to just buy something at this level. That does not work all of the time. It really doesn't. And if you're not good with position size and things like that, that can put you in a troublesome spot. The key thing here is we are not trying to catch some kind of low, because if the 30-minute is crossed down, there is no positivity there. You are in negative territory, which means down, down, down is the direction. What we are talking about is being patient and making a good decision. A good decision maybe isn't to take the exact low when you're just thinking that this has to turn around, but waiting for the market to actually show you that it is turning around, show you that this divergence has confirmed, show you that this RSI is confirming and this MACD is confirming, and there is divergence beneath it. This can be a very key time where we make something great for Apple, and if you're paying attention, it truly can be a great opportunity. But don't let it trick you in thinking this has to be an opportunity, because we easily could just curl down and not see that buy come in, not see confirmation, and then all the probabilities will be pointing to more downside. So the key thing here, the mistake I used to make, is thinking this has to make a divergence because this MACD looks nice and curvy. Don't let curves fool you, right, gentlemen? You gotta make sure that this is confirming up. We are not trying to catch the low. We are trying to catch when momentum is shifting, and not a lot of people are paying attention, and we are. First of all, for Tesla, we noticed that the 2-hour chart is close to that center line. So if Tesla gets some good news, is able to curl up on this 2-hour chart, this would actually be the first positive move since hitting those lows. Once again, on Tesla, let's look at last week just for a second and see 30-minute divergence. If we see 30-minute divergence over here in any way, I'd be paying attention, because the last 30-minute divergence right there on your MACD, on your RSI, very significant, boom to the upside. Look at that move. I mean, I think this move was kind of crazy from the low, right? 25, almost 26%. From confirmation, we see that this was about 18% move. So you see how being patient can really reward you. I'm not talking about taking it here. This looks awful, but this looks fantastic to me, okay? So switching around your thinking and not necessarily going with the narrative of everything. When something turns down, not being overly dramatic about it, but being like, okay, I'm patient and this is what I'm waiting for. These are the levels I'm looking for, can really help you from not taking a stupid thing, but also by taking something that actually has high potential to go up. And that is what Tesla had right in this area. So as of right now, if the 2-hour is able to cross up, that would be a fantastic thing. If we're going to see downside, because I'm sure there are a ton of stops down here, I think it would be very interesting for the MACD to be able to even cross here for a couple days, see Tesla cross down for just a couple of days, wipe out these type of areas, and then can it curl back up into positive territory? Because as of right now, Tesla already has daily divergence. I am not leaning towards this happening with the look that we have at this moment, but I'm aware that it's possible. I'm aware that the daily can cross down, take out these stops, and then see that curl back up, creating somewhat of a triple divergence on the RSI. So these are some things I'm paying attention to for Tesla. I am not saying that I am like ultra bullish. That is where I'm leaning towards at the end of all this, but I'm aware that in between that bullishness, we might run into that chop down in these areas. So I'm paying attention, I'm managing risk, and I'm making sure to trade like water. I'm paying attention to the rocks in front of me, understanding, hey, which way is most of the stream going to head after this, and which way is going to lead me into the meadow and not into the sewer with the it clown. Amazon on the daily scale, the only thing you have to get below to make daily divergence here, if you can see that buy come in below this 170.86, if we're able to see some kind of move to the downside first, and then curl back up into positive territory, you have daily divergence for Amazon, so just be paying attention. But Amazon, for this moment, we can see that the 2-hour is a slightly more negative, but what were we talking about for a lot of these stocks? And Patreon members, maybe you remember this as well. Maybe you guys remember in the live show, retesting the breakout area. We talk about that a lot on this channel because it happens a lot on this channel. We run into weekly expected moves and then we curl back down. Everyone thinks it's super bearish, but really all we're doing is retesting the breakout area. And if this 2-hour curls up, is it closer than the last time it curled up to going positive? Yes, which means to me, this could actually be the strong move coming in soon for Amazon, but we need to see that curl up into positive territory first. As of right now, it is curled down in negative territory, which means down, down, downside until that is able to curl back up. We are not magicians. We are not psychics. We are not mind readers. We are not trying to catch the real low, the actual low, the dot on the line low. That is not the game that I play. I do not play that game because that is a very risky, risky, risky game to play. I would rather take a way less risky play, which is when momentum is telling me there can be a huge shift here and the probabilities start pointing in that upward direction. That would be when this MACD on the 2 hour is actually able to confirm in the upward direction. That would be when the RSI is actually able to get above that center line. Okay, so this is something key. Once again, we are mentioning this. This is high volatility times. So if we are going to see some kind of big crash moment, you're going to see things curl down and they are never going to be able to curl back up, right? Until they're at lower levels. So if I see the 2 hour curl up here for Amazon early on in the week, that would be something different. If that is able to go positive right here on the MACD, then that would tell us that we have a good likelihood to take out these levels, maybe test these levels, and maybe even go higher than that with the good probability for it, with the divergence or with the actual technicals that we see down there with a potential higher low. A stock that will go lower and cause the SPY and the Qs to go lower, I highly suggest you understand that that's most likely going to be semiconductors. But do semiconductors look awful right now? They're in our buy zone. They're in a buy zone. They're retesting what? Breakout area once again. We do see the gap below us. We should be aware of little moves down like this. But if the 2 hours just able to confirm up, look where that is, positive territory. You know what happens a lot when you confirm up into positive territory? Well, you react to that good level, you bundle up for a while, and then you're able to see that upside move. So we'll be paying attention to this for NVIDIA. We can see that the 30-minute chart as of right now could make that 30-minute divergence as well, right? We don't have to just go up right away. There's a lot of ways this can move, and that's why it's very important to be understanding your position size and understanding that waiting for confirmation is a good idea in this environment. You will see plenty of upside or downside based on the signals that you do get because you have very high implied volatility. So being patient is a very, very good thing around these times, at least when you're doing something that's, when I'm talking about my strategies, the way that I like to trade, the 30-minute, the 2 hour. I understand day traders, you can utilize all the information that we give you. You can utilize those weekly expected move and do what you want to do. That's perfectly fine. But understand that my game is not day trading. My game is waiting for it to show me which direction the market wants to go for a few weeks and then buying that direction and then selling on the way up. That's how I like to do things. We might think about money differently. We might enjoy trading differently. So something I would watch for here is if NVIDIA gives me a 30-minute divergence, well, that likes to curl up 2 hour charts. But if the 2 hour chart is able to curl up, you can see how easily that would go positive. So if the 2 hour, at the end of the day, with or without divergence, if the 2 hour chart can curl up here, hey, we can take out these levels and maybe start to see something crazy. Downside for NVIDIA. Once again, if NVIDIA is going to crash down into oblivion and go to $20 like some people are saying, well, then you know what you'll see first? The daily MACD curl down into negative territory, and then you will never see that thing be able to curl back up. So even in these areas, even if we see dramatic downside to start off the week, just pay attention to your weekly expected moves, Patreon members, because if you set up a divergence, everyone's going to be calling for a stock market crash. You're going to see confirmation and say, thank you to the charts. Just real quick, we see a very similar thing from AMD, not as windy, so not as good of a look. You might be looking at a 4 hour chart for that, just so you are aware, but it's overall the same things, right? 4 hour chart, do we see little signals in here? 4 hour chart, do we see that come down for the divergence, or does the 2 hour just confirm up into positive territory for AMD? Another one, just paying attention to the fact that semiconductors overall could be in a rough spot if we're going to see downside for the SPY and the Qs. I highly think that that would be in the semiconductors would show some weakness. Meta, I wanted to talk about this one because Meta is suggesting something here in a weird way. If you read into this with not necessarily common sense, but just like a critical thinking type of brain, Meta is overall suggesting that we could have a bottom right now. Okay, now it could be saying that we need more time for that to come up, so we'll pay attention to the fact that a 30-minute divergence still could be necessary here a 30-minute divergence in some way could be necessary, just like we did over here. Look at the divergence that was created. It confirms up on the big bar, right? It confirms up on the big bar. Now you're probably going, oh man, I missed out on the entire move. Well, I really want you to pay attention to the fact that this confirmed here at like 541.65, and it's still projected 8% higher. That is a great trade. It's a very quick trade, right? As even for my strategies, it would say take that, hold that for a few days. You only had to hold it for a couple of hours, so that's fantastic. But I just want you to notice that the 2-hour has great divergence here, right? This is suggesting a daily chart can curl up into positive territory if we get confirmation. We have to see the good buy come in. We have to see the 2-hour able to rotate up, and we have to make sure nothing's going wrong, right? We have a plan for the trade and a plan for if the trade goes wrong. Just because a confirmation does happen with divergence doesn't mean it's 100%. There is always the chance that something goes wrong, and we pay attention to that, and we give you a strategy for that. I show you how I like to actively manage my trades when I'm seeing certain things on the chart. And part of that is creating a plan for if something goes wrong. Do not assume that because you take a trade, it is 100%. That will convince you a lot of the time. Take profit on the way up. Hey, I hit a weekly expected move. Okay, take profit. Okay, hey, we're seeing divergence here. Okay, I'm going to confirm. Okay, awesome. I'm going to take that, but I'm also going to have the plan with a shorter time frame in case something goes wrong. That's what we like to do around here. For the daily chart, I just wanted to mention that, yes, we have not seen that curl up. We've never seen the daily chart able to curl up here for Meta, and you'll see a slight divergence there on the RSI. So you know what curls up daily charts? 2-hour divergence, and you have 2-hour divergence right now on your MACD, on your RSI, very significant for Meta at the same time, retesting the lows. This is a fantastic look for Meta if it is able to curl up into positive territory. I would highly suggest not necessarily reading into the narrative of, oh, there's going to be a dead cat bounce. This is going to be another drop. If you are going to see a dead cat bounce, that most likely will not be able to curl up this 2-hour chart. Microsoft is in a troublesome spot because it is down at the key level. It is literally closing at the key level. We can head down to lower levels to retest breakout areas for something like Microsoft and utilize our weekly expected moves. But for the time being, we don't necessarily see that 30-minute divergence popping up. If it pops up early on in the week, pay attention if we get good news, because that could curl up the 2-hour chart. And once again, you have another stock that saw a great move, right? Saw some double bottoming, went to the upside, went to our resistance zone, went directly to our 393.20, that line that we like to pay attention to that we found a long time ago, just a little resistance that can become support and things like that. And then we tag it twice. You see another 30-minute divergence to the upside, and then boom to the downside. So not only did you get a reversal signal here, you got a reversal signal at the highs as well. You can pay attention to these things in both directions and utilize weekly expected moves. In a bear market, this is great bear market practice. This is pretty much a bear market behavior right now, which means there are trade setups in both directions almost every week, right? So this is very, very cool to see. But for the time being, what do we see on the charts? We see that the 2-hour is facing down. That is overall saying if we're not going to see any buy come in, then what's that going to do? It's going to head lower. Okay, so this has not confirmed up yet. But if it would confirm up, how are you ready to react? And if something would go wrong after that, how are you ready to react? It is always thinking one step ahead because you respect your money. And even if you have a small amount of money, I really, really want to convince you, treat a small amount of money very, very seriously. If you treat a small amount of money seriously, you are going to treat a big amount of money seriously later. That is very key, because I guarantee you right now, if you are upset by losing $500 and then you end up becoming a great trader, you are going to be much more upset about losing $5,000. $50,000, $100,000 in a trade. So make sure that if you're just starting out, you're treating your money, the little amount that you do have, treat it very seriously. Understand you do not need to get rich quick. And the actual way to get rich quick is the slow way. That's how I like to do things. I am not someone who is just amazingly rich and I just talk about this stuff on YouTube because I'm this and that and I'm gloating and all this. No, I am talking about these things on YouTube because I understand, and I had to understand after making a bunch of mistakes, that the slow way is much better, and the slow way is actually the real way to get rich quick in markets. Yes, it takes a little bit more time, but getting rich quick, I guarantee you will get rich quicker if you do the slow way compared to every single person that tries to do it the fast way. So understand your risk to reward, understand the position size, and understand that respecting a small amount of money will help you later on in your trading career where you will respect bigger amounts of money. Pretty quickly now, because we're seeing similarities, Google 2-hour needs to cross up. If it makes a 30-minute divergence here, fantastic. Obviously, if the daily scale is able to rotate down, what are we looking for? Potential for daily divergence. You already have that flat-ish, slightly up on your RSI. So Google, once again, coming down to that line of 153.87, very, very nice. And if the 2-hour can confirm up, that would be a great thing. If the daily MACD does curl down, that would overall not be a good thing. Let's get into some memers just for a second here, because is this looking so different? Not necessarily. AMC, if that curls down on the daily chart, hey, that can go down, 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 down. But if that actually goes like this and curls back up into positive territory, are you ready to react? Do you think that, AMC has to be the worst thing in the world? Do you think AMC can't go to, 360 and be a great trade? Because guess what? If it came down to these levels and confirmed daily divergence, maybe it makes this kind of look, right? Maybe it goes like this, and let's say it confirms right in here. Okay, awesome. Well, from that high point there, we could see that if that just went up to 350, that's 27%. That's good money. Okay, so don't be hating on a stock just because it has a certain name, just because it has a certain narrative behind it, just because it's not something that you like to pay attention to. Because if AMC makes a daily divergence again, which it already has multiple point divergence down there on your RSI, you can see that the MACD has held the divergence the whole time. So this already has daily divergence, which means pay attention if the 2-hour chart curls up into positive territory. This is how something builds up over time. Maybe reacts to something like 317, curls down for that support, and keeps the positivity going. As long as this remains in positive territory, that's going to be a good thing for AMC. If it starts to lose that and the daily crosses down, hey, that means bad, bad, bad. But if that buy comes in, am I ready to react? And this is where I wanted to get into GME. Now, GME running into a key level, I'm just going to tell you there's a monthly expected move here. You have a ton of reversal signals, but is that reversal signal confirmed right now? Are the signals suggesting downside? I mentioned it here and I said, yep, that's confirmed. So watch out, because this can be a 2-hour pullback, right? We do pull back on the 2-hour. We react to a higher level, and we see that we created another divergence point here. So if GME is able to curl down on the 30-minute again, well, then this 2-hour chart's not going to be able to curl back up into positive territory. This is your 2-hour pullback. You need to see that push through. And that's the key thing about GME. If you're looking for this to do something crazy, that is a 1% moment you're looking for. Well, guess what? You have a 68% line right here. So am I saying like this is bad, this is awful? No, if the 2-hour confirms up, that's exactly what you need to see something crazy. But most of the time when you run your head into this line and you have reversal signals and those confirm, you will see further downside, even if that is flagging. Maybe that is a big drop. But as of this moment, you have 30-minute divergence across this. It has not confirmed yet. So hopefully everything remains good. Hopefully the 2-hour gets a good buy to come in, and you have to get through this wick right here. Pretty much your monthly expected move sitting right on that wick. You know what you got to see a major squeeze, like a short squeeze? Well, you got to get through a monthly expected move, and you got to hold signals positive. JP Morgan right now still in positive territory. Everyone's saying JP Morgan is calling the next major crash. Hey, that's fine. If that happens, then a daily chart will curl down and not be able to curl back up. And that's the truth of it. If this is going to crash down, it's as simple as that. A daily chart will cross down, and then this will cross on the MACD, and then this will cross on the RSI, and it'll just never turn back up, right? If this is going to be a mega crash and we're just going to head down 50% more for JP Morgan, then the daily chart is going to curl down, and it's not going to curl back up. But right now, what does JP Morgan have in front of us? Let's not read into the narrative. Let's do our own thinking, because our own thinking is going to be better than everything else. Our own thinking in markets is going to be better than the news you see. It's going to be better than potentially YouTubers. Your thinking about your strategy is going to be better than my thinking about your strategy, because you have done it longer. You have made it yourself. You have picked out something you're comfortable with as far as risk to reward goes, and that's fantastic. So think about it yourself. Make your own decisions and just try to make those good decisions, right? We see daily divergence on JP Morgan. Daily divergence does pop up sometimes, right? It pops up sometimes, it can fail. But for the most part, it is very difficult to fail a daily divergence. We see that if the daily would rotate down, that would be the bad scenario. We would watch out for traps down at lower levels and utilize our weekly expected moves. But is this bad right now? No, you have created that divergence, you've confirmed the divergence, you've started to consolidate after confirming the divergence, which happens a lot of the time. And then if this 2 hour curls up, it is still in positive territory. As of right now, it is facing down. So what can we look for if this is going to maybe give us a signal early on in the week? Well, let's pay attention if we get a hint and say thank you to the charts if they give us a hint, because this would be fantastic for JP Morgan to head to the downside, cut through this level, get people to think stock market crash, and then we actually curl back up into positive territory, confirming on the MACD, confirming on the RSI, and confirming with the price action. That would tell you, hey, this has a great probability to turn up the 2 hour chart. And where is that 2 hour chart? Well, the MACD is in positive territory, which means this can see a solid move up to potentially 246, but I'm really liking this level of about 250, 350 for JP Morgan. Now let's talk about volatility and then get to hanging with family. The true thing that is important, I know we treat these things seriously. I know that money is very important, but is money more important than spending time with your family? Time is the only thing that you don't get back. You can always go get a job. You can always go make money. You can always sell something. There's ways to make money all the time. There's ways to lose money all the time. I get it. It's money. But you don't want to lose a family member. You don't want to lose time with your family. And I think that's something very important to say today. Time is the only thing you don't get back. And maybe time is something you need to make more valuable when looking at charts. Maybe patience is something that needs to be practiced more. And those are the type of things that you can have a conversation about with yourself today. As of right now, what is volatility, the VIX, right? What is that overall saying? Well, what are we looking for? We were looking for a good confirmation below the 9 while the MACD is crossed, while the RSI is going through the center line. The RSI has not gone through the center line yet, but the MACD is crossed down. The daily chart has seen a negative day below the 9 wall that is crossed down, which means most of volatility is projecting that we are going to head lower. And I think we're going to at least see a test of that 200 or the level of 20, and we will be paying attention. Now, there is something I want to pay closer attention to if volatility is going to come back in. Here you go, the 2 hour chart. This is very key here because this means, hey, we could see positivity early on. So if volatility is curled down when we start off the week, that would suggest that we're getting some kind of bounce. But let's pay attention to any kind of trap. And this is going to be your trap to the upside, the best thing to pay attention to if we are going to see another big drop after an upward move. Well, if that 2 hour is able to curl down, hold up better, and then curl back up into positive territory, we could see that on the MACD. You will not see it on the RSI. And that's why I'm not necessarily thinking if we see any kind of drop this week, it could be mean, but I don't think it leads to a stock market crash. Volatility is not behaving like it's really not showing the type of signals that you would see even forming possibly soon to see some kind of stock market crash. That's the truth of it. Now, it can surprise and the market can do whatever the market wants to do, right? If this is going to be really, really bad, well, then this divergence might be all you need, and then a daily chart curls up. But as of right now, you are not seeing the things on the RSI that you would need to see. You are seeing it on the MACD. So I'm treating it like, yeah, we could see a drop, but I don't think that, we're not seeing enough information. We're not seeing enough signals out here to say that a stock market crash is the highest probability thing, or the stock market crash is even a big probable thing right now. We're not even saying that the stock market crash is even probable right now. It's really not based on what we are seeing out there. It's really not. But guess what? If it was going to happen, you know what would happen? A daily chart would be able to curl up for volatility. So maybe that 2 hour divergence is good to pay attention to because we know the market can do crazy things. And even though I don't think a stock market crash looks probable in the signals, do you think if volatility curls up on a daily chart right here and looks like it can take out this high and go make a new one, that I'm going to hold on to long positions? No, I still let the charts tell me exactly what to do. So if you are going to see some kind of stock market crash, you're going to see the SPY curl down, and it's never going to be able to curl back up on a daily chart. And guess what that means for volatility? Well, if volatility is going to see that crash volatility, and we see this thing curl up on the daily chart, and that thing can just boom higher, this would be the area to potentially make a decision. So if we think about these things very simply, we understand that stock market crash is not really showing up too well on the charts at this moment. But even though I know that it's not necessarily showing up, I'm still going to treat my money with respect. I am still going to understand the confirmations that I would need to see where a stock market crash becomes more probable. And that would be if volatility curls up on the daily scale and the SPY curls down on the daily scale. Those two things can save me from making a silly decision like holding on to something that is losing value dramatically. So the main takeaway here is I really wanted to get through a lot of this for you guys. I really wanted to give you guys something that you can truly utilize. And I really hope that this video was helpful, at least to some people out there. And please let me know that it was helpful. Please come to the live show and tell me that it was helpful, because I want to make sure that the information I'm putting out there is easy to understand. And really making decisions. I understand trading is a battle. Trading is difficult. Trading is hard to make those decisions. But if we can do our due diligence, if we can really look for these key areas and wait and be patient, we can find those good opportunities. And that was proven to us last week. And if we understand risk, we can understand that if I'm not comfortable and my trade's not comfortable holding, if I'm betting too much money and it's going to make me lose some hair over it, then if this 4-hour chart curls down, I can just be out of my longs. And if the 4-hour chart curls back up, I can be right back in those longs. And it can be as simple as that sometimes. Sometimes we overdo things in our head. Sometimes things are more dramatic than they really need to be. And I think the media is a big culprit of that. I think the environment that we're in is a big culprit of that. So I'm just trying to make things more clear. And I hope that this is easy to understand. Looking for any kind of higher low in these areas, any kind of divergence down in these areas, or looking for the 2-hour chart to just curl up right away in the week with good news to hold the key levels that the bears keep tackling. All right, guys. Thank you so much. I hope you have a blessed and happy Easter. Say hello to your family for me. Have a great day. Even if you can't hang out with family, call someone and tell them you love them, and understand that today is a great day for reflection to actually see what kind of decisions am I making and how can I make those better decisions over time. Not even with trading, sometimes just with real life. Thank you guys so much for watching this video. I hope you have a blessed day, and I hope you guys have all the luck in the world trading this week. I will see you live on YouTube tomorrow morning. Have a good one. Peace out.